financial statement analysis and introduction. So if I'm going through a financial statement, if I'm doing the CFA level 1, then financial statement analysis is one of the most important part of CFA level 1. In this session, we'll understand what are the various components of a financial statement. We'll try to build a financial statement, and moving on, we'll try to see that which are the ratios we should have a look at to analyze a company, how the ratio should look like, and what should be the sector focus like. So these are the various things which we'll have a look as and when we go inside the session. Students, will start with this session, and files have been mailed across to you, or they would be again be mailed across to you. So coming to slide 2, what is the role of a financial reporting and financial statement analysis? So financial statement is the entire performance of a company. The role of financial reporting is to provide information about the company's financial position. So if an investor or of a user of information who is investing some money in a company, he's supposed to know the financial position of the company. He's supposed to know the performance for use by parties who are both external and internal to the company. That is, if a shareholder has put some money in the company, he has got every right to know that the money which he has put, what has happened with that money. A debtor to whom we are selling good, a creditor from whom we are buying good, is supposed to see the financials of this company so that he understands whether it's good to sell good to this company on credit or not. An employee should have a look at the financials to know how the company at which he's working is performing. So financial reporting can be for both internal and external uses, and financial statements are issued by management, who is responsible for their form and content. So financial statement is entirely the responsibility of the management of the company. The role of financial statement analysis, on the other hand, is to take those financial statements and other information to evaluate the past, current, and prospective financial position. Financial statement per se would be of limited help. The great help comes when we see the financial statement from a perspective, from the historical angle, plus we try to see how the financial statement is looking like currently and what are my forecasted number. So from that perspective, once I have a look, then my financial statement becomes useful. So who are the users of financial statement? Equity investors are primarily interested in companies' long-term earning power. Definitely, if they've invested money, they would want to understand that how the company is growing over a period of time, what is the growth rate, whether they would be able to repay their money or not, that money is repaid in the form of dividend. Short-term creditors are those people who are lending the money to the company for a shorter duration, for a smaller duration, such as banks, trade creditors, etc. Long-term creditors are those who who lend money to the company for a longer term horizon. So even they are interested knowing the financial position of a company. There are 4 principal financial statement. If I'm doing a business, I'm running an entity, first I'm supposed to understand that what is my income looking like. That is, the statement of earning is very important. Second part is the balance sheet, that is, what exactly is my financial position, how much I own assets and what are my liabilities looking like. What is my cash flow statement, that is, from where I'm getting cash and where I'm putting my cash in, that is, the sources of cash and uses of cash. The statement of change in owners or stockholders' equity. Owners, they are the promoters of the company, how their equity has changed over a period of time. That is, from last year to this year, that is very, very important. So these four statements are very important. Along with these four statements, footnote and supplementary data is next important part, which are useful for analyzing the financial statement. We will go through all these four things one by one in great detail. So to start with, the first item would be income statement. So the income statement summarizes revenue earned and expenses incurred. That is, income statement effectively shows what is my income for a financial year or for a reported period. That is how much money I have earned. So how do you calculate the money which you have earned? The money which you've earned is the good which you've sold in the market minus the cost price of those goods minus some administrative expenses. So your net profit is effectively the goods which you're selling in the market less the cost of that good less any expenses related to running your office. So it explains some but not all the changes in assets, liabilities and equity of companies between two consecutive balance sheet dates. Income statement less income and expenses is as they are directly related to the company's recurring income. See, there is no specific format for an income statement for US GAAP. Okay, they provide you a generic format and you can surely customize this format based on your company, based on industry to industry.